Good morning everybody, welcome to this Smart Charts European session. Hope you're all well and have been having an incredible week in trading the financial markets. It's been pretty active this week so far, in particular on the faster time frames as we're dealing with those big sell-offs in a lot of the dollar pairs with the Aussie US, Kiwi US all sort of driving the market lower. Start to see some rallies in some of the yen pairs, in particular dollar yen. So a lot of the activity has been on the faster time frames because we had the move started off on the higher time frames last week, and now we're in those daily moves, so we're dropping to lower time frames and looking for that continuation. And we've had some really good opportunities as well, medium time frames, but more on stock indices, as we've had the big moves on the daily chart in currency market or dollar pairs. Then we've had the big moves on the faster time frames. So now we have a bit more of a stabilization period on some of those currency pairs that we have been trading. So we've seen a lot of speculative capital now flowing into stock indices, and we had some really good moves there yesterday to trade the beginning of phase one. So in this instance, turning up to follow the plan really helps to shift the focus in trying to find something to do. And if you're just following a plan using systems on knowing when to turn up, what to look for, how to do it, it becomes a lot easier to trade a lot of different situations, a lot of different markets, because you're just purely focused on what the plan is telling you to do, and the plan will tell you what the market is telling you to do. And it's that shift in focus which becomes very important. So those plans that we set up on your trader certification program, absolutely crucial to be able to navigate the market, and with a probabilistic mindset where you can just go in and simply listen to what the market tells you to do with a high level of clarity and not get stuck in your own belief patterns, viewpoints, emotions and so on. So let's get a quick update on what's been going on in the market and highlight a couple of things to keep an eye on for the days and week ahead. Alright, so we've been working our way through the different economic announcements. Of course, the big one so far this week was the Reserve Bank of New Zealand interest rate statement, cutting interest rates 50 basis points, widely expected, which is one of the reasons why trading the Kiwi to the downside has been a really good trade over the past several days and week and a half. Started off with the vol reversals on the daily 4-hour chart last week, and we've had the big sell-offs in the faster time frames, your pit runner strategies, your 20 bounces. So it's been really good, and sometimes that's where the theme is, and that's why we look at different economic news announcements, because if we can get the technical narrative, so what the chart is telling us technically in terms of who's in control, the buyers or the sellers, if that can line up with a fundamentally led narrative, this is what can lead to more higher probability trading opportunities and higher reward to risk trading opportunities as well. We also look at news announcements because sometimes if you're trading the theme where all the clues will be, then yes, you might be taking more exposure on some of the Kiwi pairs. You might have been trading Kiwi US to the downside on your pit runner strategies that we go through on your trader certification program, the 20 bounce strategy, the most extreme fast time frame strategy on Master Trader. So you might be trading a lot of those things on Kiwi US. You might have been trading some of the medium time frames on Aussie Kiwi. So it can be quite concentrated. Okay, so of course follow the risk management guidelines that we lay out for you so you don't have too much overexposure, but we do want to capitalize on those themes. Now we're getting into some more higher impact news announcements regarding some other markets. So we have the US inflation report coming out today at 1:30 p.m. British summer time. So let's get a quick update on basically what that is. Okay, so the US CPI report. CPI stands for Consumer Price Index. Today it will be released at 1:30 p.m. UK time. And the CPI index basically measures the change in the price of goods and services produced by consumers. The US report is released monthly, around 16 days after the month ends. And consumer prices account for the majority of overall inflation, which is used by central banks to determine interest rate policy. And it has stabilized in the US. So the month-on-month data, we had 0.2% in August and September. The market is expecting a bit of a fall to 0.1%. But the key here is the headline rate. So the headline inflation rate is expected to fall from 2.5% to 2.3%. And the target for the Federal Reserve and most central banks is a 2% target. This should just confirm the path of interest rate cuts from the Federal Reserve, okay, with traders still pricing an 85% chance of another interest rate cut, a quarter basis point interest rate cut in November's meeting. The key here though is not about interest rate cuts. Most central banks are cutting interest rates. The key is how big, because we had the Federal Reserve a few weeks ago do a much bigger interest rate cut than expected, a 50 basis point interest rate cut, which is the first one in 4 years since the COVID pandemic. And this is why we've had a lot of flows in and out of the US dollar because of the surprise news announcement, causes big moves, readjustments in global portfolios. Okay, so in this instance, the key here is that are there going to be any significant changes? Most of the flows in the US dollar have been focused on the really strong jobs report that we had last week, which has helped put a bid in the US dollar rallies, and we also had a bid in US stock indices as well, because of a strong economy. Now, we don't try to guess what the announcement is going to be, if it's going to be strong or weak. There's three reasons why we look at these high impact news announcements. First of all, risk management. Sometimes when you're trading a big theme in the markets, your positions might be quite concentrated to a particular market. So we just want to make sure we're not too heavy on US dollar trades coming into a high impact news announcements where it can get a bit volatile. Okay. Second reason is that we look for any surprises, because most things are already priced into the market. So your day one work from your trader certification program, understanding actually how the market works, how the institutional traders create the flows we see in front of us, how they build positions on the expectation, anticipation of future events. So we know everything's already priced in. So when we get a surprise, that means everyone needs to readjust their portfolios, and that can create a lot of volatility. Sometimes it's a bit wild and we can't trade it, but then many times it is tradable and it leads to high probability trading opportunities. So we look for any potential surprises and any ways to maybe trade some sustained movement afterwards. And the third reason is that if the data supports what we're seeing technically in terms of the charts, so if the data supports the trends that we're seeing on the chart, it can lead us to more higher reward to risk trading opportunities. So there's a few different reasons we look at the news announcements. Let's see what the announcement will be, how the market will respond, and I'll try my best to keep you updated on any trading opportunities regarding it through these webinars, but make sure you're tuning into all the live daily trading webinars every single day to capitalize on all the intraday trading opportunities. There's been loads of intraday trading opportunities on the lower time frames. Make sure you're tuning into those webinars to help you identify and participate in those. All right, so let's dive into smart charts and let's see what's been going on here. All right, so if we look at the tools tab here, so something that you can actually see some of the themes that we've been talking about still in play. So we've been highlighting actually the commodity currencies have been very weak. Okay, Aussie, Kiwi, US, we've been trading them quite actively to the downside. But we knew mid of the week that we started to break that price action. So if you recall, if you go to, let's say, some of your faster timeframes like here, Aussie, US, so we've been trading this time frame agreement to the downside for quite some time, because we started off with these vol reversal, your trend reversal strategy. We started off the move here on the vol reversals last week. We've had this sell-off here, and this sell-off has been really good to trade here on the faster time frames, as we've been just trading in this sell zone, the moving average zone that the market comes into, right? But we did highlight earlier in the week that actually, look, now we're actually breaking the sell zone, right? So already we had leading evidence telling us, oh, there's not that many sellers left in this market anymore. And this is why we've been looking for maybe a bit of a change in direction in the US dollar, like a phase 2 move. We did some hedging there on euro dollar, which didn't quite work out, but that's okay. We're still net up, and we managed to hedge successfully, and that's fine. But we have leading evidence here, okay, that obviously the Aussie US, Kiwi US, which we have been trading a lot as well. Technically, we had the leading evidence that price is starting to break the moving average zone and get outside those moving averages. So if anything, we might be in for a bit more of a reversal here. And that's obviously been confirmed by seeing a little bit more strength here today in Aussie and Kiwi, right? Whereas before, on multiple days, we've actually been seeing that in the negative, all right? Also, the Japanese yen particularly weak as well. So we've been highlighting the yen pairs sort of driving higher. So we've been looking for some continuation in the yen pairs. So we'll keep an eye out on that as well to see if we can get that type of continuation unfolding. But this is mainly for you fast time frame traders, just understanding the broader flows of what's happened overnight. So we need to keep one eye out on a sustained reversal But also remember that these could just be pullbacks before the trend does continue in that direction. So, in these instances, because we're so far into the trend, we have to be looking at both sides of the coin. We have to be looking for clues the trend is going to continue, but we also have to be on alert for potential reversals and if there's any opportunities to trade those. Okay. Now, a couple of things that have been highlighted from the London and Sydney smart charts trading floor. If we go to the ideas tab here, there's been quite a few setups here where we have had a lot of breakouts. Okay, so you've got a combination of lots of different strategies inside the smart charts. You've got momentum strategies to cover different momentum based trends, long-term trends, short-term trends. You've got breakout type of strategies as well, which is supported by your AI tools in the ideas tab. And right now we've been dealing with a lot of trends, but we have been stabilizing in ranges, so we have been seeing a lot more breakouts. Okay, and we've had a lot of these breakouts here. So we've had, of course, Euro Australian potentially breaking out from this falling wedge pattern. We've had quite a few different wedge patterns actually. We've had pound US on a rising wedge pattern, which had already broken out and already started to sell off. We've had New Zealand Swiss there with this rising wedge pattern, which again has already broken out of it, and we've already had the continuation. We've had Kiwi US break outside of that rising wedge pattern. So we've had a lot of these breakouts, okay, on this medium and higher time frames of these well-known chart patterns. And sometimes that's really nice. You just turn up and the AI tool has already found those classical technical chart patterns, and we can then line this up with a bit of understanding of what's going on in the market. And it's that combination of using algorithmic AI technology and a bit of human insight, pattern recognition, the combination which is actually very, very powerful. Okay, so actually we've been trading a lot of these moves anyway through the momentum strategies as we had a trend, but then you could also have been trading them through the breakout chart patterns that have been highlighted here as well. So one pattern or one market that looks relatively interesting is going to be Euro Australian, because we're quite early on a potential breakout. Okay, so in this instance it could become quite interesting if we do get price breaking out here and get maybe some continuation into the profit zone there, which is the grey box, as you can see has worked out on some of the other ones that we've just looked at. Now, in terms of actually trading this, so in this instance, if we click the buy icon here, then we have some entry stops and targets. But we also want to, when we're trading a breakout, get a bit of a confirmation, an additional confirmation, not just breaking out a chart pattern, but we also want to break maybe a new high if we're trading to the upside, or we want to break a low point, a swing low point for trading to the downside. Okay, so in this instance, what we would do is put the entry level a little bit higher. So once it breaks this high point here, this swing high point, it just gives it a bit more confirmation. What that means is if buyers do break that high point, we could be forming a new higher high cycle. So we can actually, bring up our stop loss level sort of halfway into this rising wedge formation, because if it breaks out, it should go. If it comes back in, then it's probably going to fail. What this also means is we can, drive our target up a little bit more to this swing high point here on the left hand side, which is just, it's in the profit zone, which is good. Not right at the top of the profit zone, but again, quite towards the bottom. So keeping it a bit more conservative, but that then already gives a positive reward to risk trade here as well. So that's obviously always nice. So smart charts will already recalculate the position sizing for you, so you don't actually need to do all the calculations and formulas and things like that. And then we like to set an expiry as well. So this is a daily chart, so we'll just set a current bar close expiry. So if we don't get the momentum developing on this breakout, by the end of the day, your pending trade will expire. You didn't win, you didn't lose, it didn't cost you anything. Okay, and then we can decline or accept the trade here at the bottom. So we have plenty of these potential breakout opportunities on multiple time frames, multiple asset classes, which makes a lot of sense because we have been trading a lot of trends which now have stabilized inside of trading ranges. So plenty other opportunities on the board. In terms of momentum trends, right now we're just really looking for the continuation in stock indices, because we've had a lot of trend continuation in stock indices. So if you recall from yesterday, we have some good full wave setups here on the S&P as that finally again broke out. So again, we did have indices in the sort of range-based patterns that the AI tool has just found, but we also have price breaking through here as well, creating that trend. So we have been looking for this continuation, so we got that yesterday, which was good, and we'll look for the trend continuation here as well. We've had the same thing on the NASDAQ as well, the NASDAQ 100 index. If you recall, we had this breakout here of this range formation, and it kind of retested, and we had a trade here which failed, okay, and buyers didn't turn up, so we had a losing trade there. But then it's set up again for this trend continuation, and this was the chance of the re-entry here, to then get the higher reward to risk. And then we also we did say earlier in the week that we'll be looking to add to this trade and maybe get some momentum cycles developing, okay. So your twin flip looks for your larger cycle formations developing in the market, and then we're looking for some momentum trends developing. So we actually had that on your momentum strategies, which is your phase changer and T-wave, and then we had some really good moves, if I find it, on the NASDAQ. So yeah, you can see here we had then this first higher low after price breaking through this kind of area. So it was a really big day, really good day yesterday on stock indices, something we've been focused on, because of course all stock indices are pushing up. Well, majority of stock indices are pushing up, okay, with the S&P, the Dow trading at record highs. Obviously the NASDAQ, we're not at a record high yet, so this is why we've been trading this up to the record high, okay. So plenty of different things to keep an eye on, different types of market conditions out there, different types of setups. So make sure you're tuning into live trading webinars all throughout the course of today, help you to identify and participate in those trading opportunities with all the different live traders who are there to support you inside of Smart Charts. But in the meantime, that's it from me. All the best for your trading. I'll speak to you next time.